Hey everyone, this is your favorite root vegetable, Garrett, and your favorite point object, Keith, here for another fantastic episode of The Carrot and the Stick. Keith, how's it going?
Very good, man. How are you?
Doing well, doing well. We've got a couple things on the docket here today, really to kind of shed some light on some of the key ways that investing in Bittensor post-DTAL works. And just want to share with you guys kind of how subnets really work from an economics perspective, in terms of liquidity pools, things like that, and what that means. And then after that, we're going to go into subnet mechanisms and what that means and what that should mean for the future. So, um, yeah, that's it's going to be a good episode, and we've got a couple things to cover here. So let's just dive right into it. So subnet pools. Keith, do you want to start us off here? Give us the basics of detail of BitTensor subnets and kind of what that looks like as a new investor.
Yeah. So I think there's a tendency when, of course, if anyone's involved in cryptocurrency and trading, you're kind of looking at like, what's the market cap? And then if you're really just looking at like the top line stuff, you're like, what's the volume and what's the price? These are like the things that everybody's got top of mind, and they're easy to see because all of the different websites out there or chain explorers or whatever highlight these numbers. But underneath that, especially in the dynamic tau, the Bittensor ecosystem, the importance of a subnet pool in your sort of chosen investments, I think is becoming something that really should be top of mind especially when you're looking at making some long-term holds. If you're just like riding the winds of whichever way they're blowing that day and whichever subnet's getting the most sort of hype and you're getting in and out, that's a different type of trading. But the pools themselves that exist within each subnet are highly important to that subnet's operations, and also highly important to the expected movements of the alpha price that we're all,
Mm-hmm.
supremely concerned about. So yeah, they even have an effect, of course, on APY sort of indirectly. The way that the subnet pools work in alpha is that they grow like primarily two different ways, and then there's sort of a third like ancillary way. The two primary ways that pools grow are swapping tau into a subnet pool, so trading your tau for alpha, and that adds tau into the subnet pool and removes alpha from the pool, because the pool is a two-sided equation that holds tau on one side and alpha on the other side, right? So whenever you give up some of your precious tau for alpha, you increase the liquidity of that pool, of the subnet pool, by adding to the tau side of the ledger, and then the alpha side of that pool goes down, and that goes into your wallet. And then as long as you hold that alpha, that doesn't get counted as being inside of that subnet pool any longer. And that, of course, makes the price go up, right? Because then you've added tau to the pool and you've reduced the amount of alpha that you're dividing by to get to your price. So this action creates a lot of the price, all of the price movement that you see in Bittensor. The other way that you see pools grow that does not affect the price is through emissions. So prior to the halving of a month and a half ago or so at this point, we were adding 7,200 tau per day into the subnet pools. Nobody actually earned tau. Nobody earns tau. Everybody, earns from these pools, whether you're doing it automatically through root or whether you're manually swapping from alpha out of your wallet. But essentially what happens then is this tau gets added to the subnet pool through emissions, and then that emission structure also adds on the other side of the equation an equal amount of alpha to keep the ratio intact, or to keep the price intact of the subnet, right? So emissions don't change the price. So when you see, a subnet with a high level of emissions, what you're doing by feeding those emissions into that subnet are increasing its liquidity, the depth essentially of that pool. You're not making the price go up. Now, this is where I would defer to your expertise and talk about the third way that we can add tau to these pools, and that's through this mechanism of chain buys. And that would be kind of the less popular, the less, for sure, way less tau added to the pools when you compare that to the first two options. But how does that work when we have chain buys, coming into the equation and adding tau to the liquidity pools in these subnets?
Yeah, so I mean, we talked about emissions, right? Which is a relatively equal balance between tau and alpha at whatever current price is. And so when emissions are added into a subnet, you're just expanding liquidity, like you mentioned before. However, there's this mechanism called chain buys, which can help reconcile the difference between the subnet's current emission versus its tau flow. And this allows the chain to add tau in an imbalanced fashion, where instead of adding, tau and a equivalent amount of alpha based on the price, it'll just add tau, and that will have a positive impact on that pool in terms of price and in terms of liquidity, and that's really what chain buys are. And so it's really a mechanism to reconcile kind of the spot difference between uh, tau flow and emissions, and tau flow being the amount of uh, tau coming into the pool through the market.
And that doesn't last forever, right? That's just sort of a short-term thing based upon maybe a spike in volume or something where you
Right.
you see the price move quite a bit, and then you have to play, or not the price. You see the tau flow move quite a bit, and then you have to kind of play catch up with the price from the chain's perspective.
Right. The chain buy mechanism is just there as a way to catch up.
Yeah.
Exactly. Um, so
Okay.
that's there to reconcile that difference, but primarily speaking, uh, you're going to get liquidity injected through emissions or through investment from other parties.
Yeah. And and so when you take a look sort of at the lay of the land here of the pools, and you try to get your head around what's happening, right now we've had almost a year of these three different mechanisms sort of at work, and we've got some huge disparities in the amount of tau in the subnet pools, that in the subnets that we all know and love. Just to highlight this, once you get out of the top 20 subnets, um, there are no subnets with more than 20,000 tau in their pool, actually 21 subnets. So you have a pretty actually firm cutoff with this number of 20,000 tau, at least at this point. And that'll continue to go up as we add emissions. But when you're investing into these subnets, like, maybe Garrett, you could talk a little bit about the difference between when I buy into a subnet that has 50,000 tau into its pool, and it has the same price as another subnet that has 5,000 tau in its pool. What does that mean for the alpha that I'm holding?
Yeah, it's a great question. So when we talk about emissions and we talk about tau in the pool and alpha in the pool, that is just a matter of liquidity. It doesn't really, it's not really a commentary on um, the total value of that subnet. So you could have subnets that have a lot more liquidity than other subnets and have the same relative value. And in fact, it's theoretically possible for two subnets to have the same market cap and same price, but have wildly different amounts of liquidity. Now, the likelihood of that actually happening is fairly low, but it is possible, where you can have a subnet that has 50,000 tau of liquidity and a subnet that has 5,000 tau of liquidity. And so what does that mean as an investor? Well, if you have less liquidity, that means that individual movements of tau and alpha are going to have a more dramatic effect on the price than the other way around. If you have, let's say, 1,000,000 tau of liquidity and you buy 1 tau worth of alpha, you're not going to be affecting the price that much. But if you had only 1,000 tau of liquidity and you spend 1 tau, you're now affecting the price in a much bigger way. And the slippage will be increased, et cetera, et cetera. And so even if those subnets would have the same market cap, which would, by the way, having 1,000 tau and 1,000,000 tau in liquidity and yet somehow having the same market cap would be a very unique situation. Um, but we're just talking hypothetically here. But if they were the same in terms of market cap and you have that low of liquidity for, let's call it subnet B, uh, subnet B would have a pretty volatile price not because the liquidity is affecting price directly, but because with that low liquidity, the balance between tau and alpha will be disrupted a lot more easily than than the alternative. So if you have a really high liquidity subnet, then the buys and sells are going to have a much smoother curve and much smoother impact on the price than subnets that have low liquidity. And so we see this with new subnets where they start with low liquidity, and we see price action that goes all over the place. Like you see, like, oh, the price is 100% up today, and then it's 100% down the next day, and it's just all over the place. And this is why we recommend for people that if you're just getting started into detail, pay more attention to the subnets that are long lasting, that are older, that have built up a lot of liquidity, and focus on those first. And just kind of keep in mind that some of these newer subnets have lower liquidity, and that's something that you need to factor into your decision making. Is that yes, there's higher reward because you are playing in a game with potentially less alpha. It's been not just in the pool, but it's been uh, minted to date, and so you can buy a lot of value there. But the volatility is going to be a lot higher too. And that's something that we caution people a lot when they're buying subnets for the first time, or they're buying new subnets for the first time, is that even if it's a really great idea, it's going to be volatile. And if volatility is your thing, and if you want to sign up for that ride, then there's opportunity there. Um, but it's going to be a different story than like shoots and those kinds of subnets that have been around for a very long time and have built up a lot of liquidity. Like I think Shoots is at over 200,000 tau of liquidity. That's a pretty meaningful amount. It's a pretty liquid subnet. So, as far as alpha investments go, you will have a much more stable experience in a subnet like that than a brand new one. Um, but you're also dealing with a subnet that has a lot more alpha in circulation.
Hmm.
So there's that to consider as well.
Yeah, you can always, there used to be like a tried and true rule, like a little cheat code you could use when you're trying to figure out this stuff, which is if it's a subnet numbered 1 through 64, they were all launched at the same time, and you kind of knew like, okay, now the alpha count was going to be the same. So when you're comparing price amongst those subnets, you had sort of an even playing field, at least as far as how long those subnets has been around and what the root prop was on each of those subnets, for example. But now that we've got this deregistration process back on, and we've started now dipping into the first 64 subnets for new registrations, you can't do that anymore, right? I think subnet 15 maybe was a pretty recent registration, if my memory served me properly. Yeah. So that's one of the first in the top 64 now that's starting to like change the way that you look at this. And the way I always thought of it was to use that sort of like demarcation from 1 to 64. And then I knew as we're getting closer to 128, we're dealing with subnets that were registered more recently, but you can't just use that shorthand anymore. So you really have to spend the time now to look at the liquidity and figure out like what sort of volatility am I exposing my holds to when I'm investing in these things that maybe only have 500 or 1,000 tau in the liquidity pool, even though from a price perspective it's 0.01, just like a half a dozen other subnets.
Yeah, yeah, absolutely. And that's it's something everyone's got to decide for themselves. But I think it's a good opportunity for us to just talk about this here, so that people understand what they're getting into in this kind of detail world that we're in. And it's very much like stock investing in the in the traditional world, the the public trading sector and things like that is like there's a reason why subnets, or not subnets, businesses are usually traded after they've gone past a certain threshold, like gone past a lot of paperwork and whatnot, is because they're basically um, asserting that they have a certain market cap and whatnot, a certain valuation to become publicly tradable because young companies are very volatile. And if you don't know what you're doing as a accredited investor, then then you can make a lot of money, but you can definitely get into some trouble. And so that's why, at least in the United States, there's um, this investor accreditation where private companies can only be bought and sold by certain individuals that have a certain net worth, that have proved some sort of know-how in the space because of the risk for the average person in those kinds of businesses. And Bittensor offers subnets a little bit differently, where you do have that freedom to trade, but with that freedom comes uh, potential volatility. And I think it's important that people understand how this all works, because you might be looking at one or two variables and thinking, "Oh, this is a great subnet, or this is a terrible subnet," and the story might actually be a little bit different for your investment decision based on some other factors you might not be considering. Like you brought up, volume, trading volume. That's a big factor that people care about. Price is obviously front and center. You have market cap, tokens in circulation, but also liquidity. And liquidity is one of the biggest factors I think that people should be making into their investment decision, is that, hey, if you've got a segment that looks promising, but is really low liquidity, just know that you're signing up for some volatility. And if that's okay with you, then enjoy the ride.
Yeah, hopefully it's the volatility to the upside, right?
Right.
If you're
Right.
doing your job and you've researched that subnet well and it's a good investment, hopefully it goes up quickly for you instead of the other way. But when you're down at the levels of some of these subnets, when you've got less than, let's say, just to throw a number out there, don't take it, gospel or anything, but let's say less than 5,000 tau or something, you can have one major player liquidate their holdings and you can see, double-digit percentage drop in price. So it can fly all over the map. And we've seen several instances over the last few months of this happening. There's certain wallets that move a lot of funds around based on what appears to be almost nothing. And then everyone else sort of suffers those movements or benefits from them, I guess. But that, when we've been saying liquidity so much, and it reminded me of something else that's sort of tangent to this that I also want to bring up. There's this concept of liquidation price of a subnet, right?
Hmm.
So we have liquidity, which is, the measurement, I would say, of tau compared to alpha in the pool. And then we have your liquidation price, which the liquidation price is when you take the amount of tau in the pool and you, instead of dividing it by the amount of alpha in the pool, which gives you the price, you divide it by the amount of alpha held in the wallets of holders of that alpha. So anyone that's swapped into that alpha or earned that alpha that has it sitting in their wallet, you add all that up and you take that tau total in the pool and you divide it by that number. That gives you the liquidation price of the subnet. And I've just sorted all the numbers here, and the top subnet as far as liquidation percentage increase. So if you compare the current price to what you'd get if you deleted the subnet today and distributed all the tau in the pool just to the alpha holders, just happens to be subnet 1, plus 107%. So they've got a liquidation price of 0.0218 compared to their trading price for their alpha of 0.0105. What does that mean, and how can I get 0.0218 from my purchase of alpha of subnet 1, or can I, or will I ever get that? Is that accessible? Is it ever going to get unlocked out of that pool? Like, what happens to that value?
Yeah, I mean, it's a great question. I think that opens up a big can of worms of subnet
Good.
liquidation.
That's what we do on this podcast. We open up the cans of worms and fire them all over the ecosystem.
Absolutely, absolutely. So, um, basically, what a liquidation price represents is, how do you make everyone whole in the event that the subnet gets deregistered? And so this is where the amount of alpha in the liquidity pool becomes less relevant, because that's owned by nobody, essentially. That alpha is just available for purchase. But if you're deregistering a subnet, then we're not talking about the market anymore. We're talking about the people that already have the alpha. How do you distribute the wealth that exists within the liquidity pool and distribute it fairly to everybody who is already a holder? So the event that Subnet 1 in this case were to get obliterated and nuked from orbit, uh, what would that look like? And so, fortunately or unfortunately, the liquidation price is not something that's going to be hugely relevant for a lot of people that are part of subnets that are here to stay. Um, but it is an important figure to keep in mind that, hey, if this subnet were to go under, what would that look like for me? I would get something, but would I get a worthwhile something? And that's something where market cap and total amount of alpha in circulation, those kinds of numbers, they start to matter because you're not just thinking about how much liquidity does a subnet have. You're thinking about how many other people own alpha and how much alpha is owned by other people. And that's where subnets like shoots start to be painted in a little bit different light, is that they're very, I guess, relatively speaking, stable subnet. They've been around for a long time. They've been in the top 5 subnets uh, pretty much ever since DTAO started. So in terms of stability, it's about as stable as it gets. But they have a lot of alpha in circulation. And what does that mean if you were to liquidate the subnet? Now, I'm not predicting that the shoot specifically will get liquidated anytime soon. But if it were to hypothetically happen, what would that mean? You got 207, 208,000 tau in the liquidity pool at the moment. That gets distributed across all the people that are holders on a pro rata basis. So how does that work? And what does that look like for you? And is that a risk that you're willing to take? And is that even something that you consider to be risk? So for subnets that are maybe on the verge of collapse, where they have not a lot of emissions, they don't have a lot of tau flow, they're kind of just sitting ducks, ready to be deregistered, and you're an investor in that, you might be thinking about this actually as a positive upside of like, hey, I could get some tau out of this, um, and maybe even more tau than I would normally get through just market action, and that becomes interesting. Um, but it's just another variable I think for everybody to consider in their investment decision, is that these subnets can be complex. There's a lot of angles to look at them at, with, and I think that's it opens up a broader discussion really on what does the landscape of subnet registration and deregistration look like? Because right now, deregistration happens basically based on performance, and you can kind of predict which subnets are on the chopping block, which ones are going to be next in that deregistration. Now, with the price EMA and whatnot, it could be that a subnet just has a dramatic collapse. But for the most part, you can be pretty much predicting which subnets are going to be liquidated first. But then it brings up this question of what if a subnet owner wanted to purposefully liquidate a subnet? Now, this is
Or
an
what if the
idea that,
alpha holders wanted to, right?
right, right. So right now, there is no mechanism to opt out of a subnet. If you're the subnet owner and you have the key, you're running the subnet, whether it's by your will or by the alpha holder's will or anybody's will, it doesn't matter. There is no current mechanism to manually deregister a subnet. And I think this has been a debate in the ecosystem on if that is desirable or not. I think there's a couple of cases to be made. On the one side, you could say this is good because it forces the subnet owners to play the game that they started. You can't chicken out. And this is Bittensor. And you've got to stay within the Bittensor ecosystem. On the other side, there could be very legitimate Bittensor people that are part of a subnet that maybe isn't really working for their strategy at the moment, whether it be their business strategy or whatever. The usefulness of the subnet no longer is valuable to them, but they're still part of Bittensor. They just want to focus their resources elsewhere. So what do? Well, they could choose to abandon the subnet and then hope that it gets deregistered. But there's a lot of potential money and resources that's tied up into that subnet. A lot of the subnet owners' net worth and company net worth could be tied up into that subnet. Is there a good way to get out of that? Well, this is where subnet sales come in, where people will actually offer up their subnets to be acquired by other parties. And that does happen sometimes. But sometimes those offers from other people aren't as good as what the actual subnet's raw value is. And so the subnet owner is going to decide, is that something that that I want to do as well? And so this is where the motivation to have this mechanism comes in, of having the option to manually deregister. Now, tying back in to get another perspective on the investor side, is if I'm thinking this subnet might look okay, and they're not going to get deregistered anytime soon, but I'm concerned about the subnet owner. I'm concerned if they're locked in, and if they have this power of manually deregistering, does that present a risk or does it present an upside for me as a holder? And I think this creates a couple of new dimensions here. So I can appreciate the debate, but I also think um, that this is a tool in the tool shed that might be valuable. So Keith, I'd love to hear what your take is on this.
Yeah. When I look at like the amount of tau that we've got locked up in these subnets now, there got to be more than 1 million. Maybe we're approaching 2 million. I don't know what the numbers are exactly. Let me just eyeball it here really quickly. You know, yeah, we got to be above 1 million at this point, just locked in the subnet pools themselves, right? Maybe you could find that exact number. But anyway, that's a bunch of value that, normally these situations happen, these lopsided situations where you have a liquidity or a liquidation price that's like more than 50% higher, for example, than the current just price of the alpha itself. When you have a subnet that performed at a high price for a long time, earned a lot of emissions, and then saw a huge drop in price, was basically mean people just swapped their alpha for tau. And there's a lot of subnets like this, even top subnets that are in the top 10 at this point are above 50% in this sort of like calculation of your liquidity haircut or, hair implant, however you decide to like look at it. I think that like the most obvious thing that comes to mind is like, well, this is decentralized. I mean, yeah, there's an owner, but the owners of the subnet really are the alpha holders themselves, right? So as governance starts to mature, is there a threshold where the owners of the alpha for that subnet can vote as a group to essentially shut down the subnet? I mean, that's the thing that like I think of initially as a way to access the tau in that pool. And then by the nature of that being an option, you have more people like piling into these subnets then that have these differences between the liquidity price and the actual price, or the liquid price and the actual price. I don't know what like the right number is. Would that be like 50%, 75%? Does the owner's alpha count as like 2x or 5x? Or, these are all like very in-depth strategic conversations. And there's so many different scenarios that you kind of have to play out, because you could have a whale come in to a smaller subnet and just buy it out and shut it down in one day, so you have to worry about that type of stuff. It poses to me like an interesting question when you start nearing the time when your subnet would get deregistered, and then you have this differential. Then you naturally see tau flowing back into the subnet, trying to position itself to take advantage of a deregistration. But by doing that, it moves the subnet further away from deregistration.
Right.
So like we have these two opposing mechanisms where you've got value being added to a subnet that, okay, you can't unlock it if you're an alpha holder, but it actually just gives you, of course, more, going back to the beginning part of our conversation today, liquidity on the subnet itself. right? So from a trading perspective, the depth is greater in the pool. From an operations perspective, when you have these subnets that have a huge sort of treasury to draw upon in their mining operations, you can then afford to like turn off the burn, because most subnets have some sort of burn going on now, right? If you can afford to turn off the burn and dip into that pool a little bit more often or a little bit deeper than you might if you didn't have it. And that can extend the operations of your subnet, I would say, for longer, and can also allow you to reward miners in a way where you don't have to be pinching pennies down to the dollar of revenue that they bring in, or whatever calculation you've come up with in order to make sure your subnet price doesn't bleed when you're actually distributing a significant portion of your emissions to your not emissions, but your alpha to your miners. Yeah, so it's kind of like a multi-pronged sort of thing. There's kind of the scenario I think to talk about right off the bat is like for these subnets that have this like top subnets like Hone is a top 20 subnet, Liam a top 10 subnet. Even like Gradients is up there in the top 15 for the difference between their price and liquidation price by percentage. So we've got a lot of subnets that everybody sort of has been very familiar with up to this point, and they've built these treasuries. And I think if you look at this from kind of just, if you've never looked at Bittensor before, you're like, what do you mean all this tau is locked up in these subnet pools? Like, how do you ever get it out? Like, can you ever get it out? Are you ever going to be able to get to that tau if that subnet isn't deregistered as an investor or even as a miner? Can you get there? I don't think you can, right? Like, it increases the depth, but it's essentially depth you'll never explore. That's kind of how I look at that. And I like it because this is one of the things that Jake, Const, Bittensor founder, was championing as one of the major benefits to tau holders when we turn on dynamic tau, which we did a year ago, is that you're going to have sort of a lockup mechanism for alpha, right? And that's what these subnet pools turn into, is that you have tau that would normally just be distributed to the tau holders in the form of, or miners in the form of either APY or mining or whatever. But now that goes into these pools, and it's not as readily accessible as it was prior to dynamic tau. So that essentially takes that tau out of circulation. The tau still performs a function because it adds depth to the pool, but it's not readily accessible by anybody. And I don't know, is that right? Is that correct? Like, what about 3-5 years from now, there's going to be 5 million tau or something like locked up in these pools? I guess that's good for the price of tau, right?
I did check, and I think we're at 1.89 million.
So we're
tau.
approaching 2 million.
Yeah.
That's a lot. What is that? That's got to be 15, 18% or something of the circulating tau at this point.
Yeah, it's a fair amount. I think it's 25% of the staked tau, which is staked tau is like what, 70% of all tau. So I don't know what the math is on that, but yeah, it's a decent chunk. And I think that there's a couple of things that you touched on there. One is like how do you access tau? Obviously we could all bank run a subnet, but if we did that, that would have such a dramatic effect on the price. I mean, the efficiency there is very, very low, which is purposeful, right?
But even if you bank run it, then you're the bank runner, so you don't get the liquidity. You just contribute to the drop, and then whoever didn't run, they're the ones at the end that are holding the alpha that get the liquidity dump, right? When it gets deregistered.
Yeah. So I mean, and slippage is a big part of that, right? Is that the mechanism is designed to prevent bank runs from happening, so no one can just steal all the liquidity and then just like run off with the tau while everyone else is left in the dust. That's very purposeful. Is that tau can be removed from the liquidity pool, but it cannot be moved all in one singular action unless the subnet itself were to be liquidated. and that's very purposeful, and it encourages subnet stability. But there's another thing you touched on in there of like alpha holders having a say in what happens with the subnet when it comes to deregistration and presumably other things as well.
Mm.
I think that's something that's been talked about for quite a bit is like, should alpha holders have voting rights? Are these common shares like a stock? And if so, like, do you have any voting rights for board members and things like that? Or is it just is it just monetary and it's worth something and that's it? Um, I think that the difficulty with alpha holders being voters is that the subnet owner is very intimately familiar with what's going on inside the subnet, and the alpha holders aren't necessarily. Um, and so it can be difficult to defer to the opinion of the alpha holders, but this is very similar to common like investors from Robinhood in voting on proposals at Tesla and Nvidia. This is very similar. I think that you could see a hybrid where you have these proposals that are offered up by the subnet owner that are approved and ratified by the alpha holders, where the subnet owner can say, "Hey, I'm considering a subnet deregistration, but I can only do that via the approval of the alpha holders," and then they have this opportunity to vote. Um, Then there's a question about like, well, what level of participation are we going to expect from alpha holders? Because it's presumably going to be a lot that aren't even aware there is a vote. They're just chilling with their bag, and so how would you structure that sort of a voting mechanism? Would it be just like whatever the yays versus nays are of the people that do participate get to decide, or whether there be a minimum threshold of participation? What does that even look like? I think there's a lot of questions there, but it's interesting of alpha holders potentially being involved in subnet governance. I can actually see that as being a real answer to the problem here of, hey, should subnet owners be allowed to manually deregister their subnets? Well, maybe the answer is they can attempt to via the approval of the alpha holders. The alpha holders cannot choose to liquidate a subnet by themselves, because then you introduce this attack vector of hostile takeovers where it's like, I'll just become the number one alpha holder and I'll get two of my friends to vote on deregistering the subnet, and bing bada bing, we've killed the subnet. But if you make it so that the subnet owner has to be the one that proposes something, he can't make it happen by himself, but he can make it happen with approval from alpha holders, then I think that becomes interesting. And maybe that's a way to kind of balance out the power in subnet governance in a limited fashion. I think that there are some things that subnet owners should just be able to do as like an executive decision. But subnet deregistration is a pretty big deal. It affects a lot of people. And so if the subnet owner is like, "Hey, I want to get out of this. I can't do this anymore," or I just have other things that I want to do, and maybe I want to build another subnet or something, just not this one. How does that work?
Yeah, there's so many different mechanisms here, and you can kind of draw on traditional finance, and then kind of make parallels, and the whole basically like every single option opens up in front of you. Like think about dividends, for example. So like some stocks, right? When you go buy a common stock or whatever, I don't know if it's a common stock, but you buy a stock, it has dividends, and that just means that you essentially get some of the cash that that company either has or earned or whatever, gets sent to you at the end of the quarter or the year or however it's done. Um, like maybe a subnet then pays dividends to its alpha holders from its pool. Like there's a vote to distribute some of the operating capital essentially that sits underneath that subnet in the form of pure tau, and it goes straight into the wallets of the alpha holders, and there is no like and then of course like the price would go down, right?
So isn't that though? I mean, you have dividends that you're already getting through your validator, right? Because everyone that holds alpha holds it via a validator, and that validator produces an APY. So
That's more like
the,
you get more stock, you know? That's not cash.
yeah.
In this
That's
situation,
true.
like tau is like the cash. But since your subnet, your alpha value then would also go down based on that because you're pulling that out of the pool, right?
Would Subnet owners find that desirable? Is to say, I'm going to sacrifice some of my liquidity to give dividends to my holders.
I don't know. Why do other companies do it? Because they want people to buy they want them to buy the stocks, right?
Well, but with other companies, they pay dividends based off of profits, not based on liquidity into their stock exchange.
Mm-hmm. Mm-hmm. Yeah, this is true. Yeah, I mean, but then when they pay, I guess essentially they have less cash in their coffers when they pay out the dividend, right? So they're a slightly less valuable company than they were before, but their financial funding instrument or their valuation instrument, which is their stock, is going up in value because people want to get a piece of that profit. Um, I remember like back when we were before Dynamic Tau or even leading up to Dynamic Tau, there was a lot of talk about this of like profit sharing type of like, it turns out profit's a little harder to make than everybody thought. And right now you wouldn't be sharing there's no profit to be made really, I don't think necessarily at any subnets at this point. At least no
I
major
think
profit.
one thing that's really interesting, I don't know if you've ever read Milton Friedman.
Mm,
He's an economist, but he talks about the stock market and just businesses in general as being their primary function being a mechanism to give a return to the stockholders.
mm-hmm,
And with companies that um, like hoard funds, they're actually working against the interest of their stockholders, except as a means of basically preservation of wealth against taxes at the time, which is I mean, that's kind of its own tangent, but
mm-hmm,
basically, in his mind and his theory was that the reason why we in the United States have experienced these kind of megacorps is because they are incentivized to preserve the wealth of their shareholders by holding funds and then making strategic investments as a company because the uh, shareholder is taxed at the point of selling the stock at capital gains. But if they are given continual dividends, then they can be taxed on those dividends. And so the primary purpose of a business is to provide value for the shareholders. And right now, the best way to do that is to just increase the value of the shares, not
mm.
necessarily to distribute funds. So I guess that kind of, if we're going to create a parallel between a business and a subnet, what is the primary function of a subnet? Is it to provide some sort of meaningful output? And the financial side is really a mechanism to incentivize the miners, and that's all it is? Or is it really there as a way to say, hey, the primary function of the subnet is to provide a return for the alpha holders? And if that's the case, then you do have to think about what kind of financial assets does the subnet hold? What does it have control of? Because right now, the subnet owner does not have control of the liquidity pool. The liquidity pool is kind of just a gateway into and out of the subnet. But if the subnet
It's more
owner
of a
could access
characteristic
it,
really than a lever, you know.
hmm right, right. So I think that kind of brings us like into play, like what financial components are there to a subnet, and what is the primary function of the subnet?
If there's fiduciary duty here, then we need to issue some warrants because there's some owners that are failing on holding up their end of the bargain. I think that's the greatest thing about sort of this Bittensor and where we find ourselves now with subnets is, and especially as this thing continues to evolve, there's going to be subnets whose main goal is to make money. There's going to be subnets that main goal is to, advance the frontier of XYZ research. There's going to be all
hmm
kinds of different, there's going to be charity type subnets, all this stuff's going to happen. There's going to, we already have like the commodity sort of trading subnets. Um, yeah. I don't know what the right answer is. I don't even know if there needs to be an answer. I do think that everybody, if nothing changes, that's fine too, because this lockup mechanism that we've sort of created here with dynamic tau buoys all boats by effectively making that tau in the subnet pools unsellable. You know, okay, it's not in your hands, but it's not in anybody else's hands either. And now that we're approaching 2 million tau in these pools, and eventually when all the tau is distributed at the end of time, I don't know what that'll be. That it's going to have to be
Mhm.
some approaching 10 million tau or eight. I don't know. I guess it depends on the trading and how people are, swapping into
Yeah.
subnets and everything. But it's a really interesting characteristic of kind of Bittensor in general, and probably very, very unique to cryptocurrency and even for sure artificial intelligence and financial instruments like this ecosystem, and then the tie to the main token. It's a really fun thing to kind of think about. And if anyone's got any ideas on this, feel free to drop them in like the comments or whatever. I think we would love to talk about those and incorporate them in our next conversation.
Yeah, absolutely. Absolutely. And that's a great call out is guys, comment on these podcasts on what you guys want to see and hear from more. It just makes us better. But before we wrap, let's touch on subnet mechanisms for a minute. Um, Subnet mechanisms being incentive mechanisms is kind of this interesting capability in subnets that allows for there to be more than one incentive mechanism in a subnet. And um, I think that's kind of interesting because an incentive mechanism is basically like the game that you're playing in a subnet, right? Like if I'm doing a model training subnet, the incentive mechanism might be that, hey, we want to see loss go down. We want to see precision and recall going up. These are the metrics that I might care about if I'm doing model training. And I'm going to structure my incentives around that to see like, okay, well, if you're a miner, you got to prove, some way, somehow that you're producing, models that affect those values in a positive way. And that might be the game. But what if I have a subnet that has two games to play?
Mm.
What about three? What about four? And then there's a question of how many miners should be allowed to play each game. Because right now, there's 256 slots in a subnet shared between validators and miners, but most of them are going to be miners. And they have the option of, if there's more than one mechanism, they can mine both mechanisms. But should that be the case? Should miners have to commit to a certain mechanism? And if they want to mine more than one mechanism, then they have to have two slots. And how many slots per mechanism should there be? And all kinds of stuff. Like there's a lot to get into there. I don't know how far we're going to get today, but it's an interesting concept where subnets have this ability to play two games at once, maybe even three or four one day. And I'm just thinking about like what does that allow for? Uh, you in terms of the subnets being able to deliver on their missions, and what use cases are there? Like there are some subnets where maybe each game is a slightly different scenario, or it's a different um, it's a different kind of micro task within the grand scheme, um, and maybe that's something that is actually really important for subnets to scale on. Like maybe I'm doing a vision subnet. I'm doing like an image generator subnet. And maybe one of my incentive mechanisms is all around video, and one of them is all around just still images. And maybe those are two separate incentive mechanisms, and I want to be able to encompass both of them in my one subnet. Or maybe the one incentive mechanism is all about cats, and the other one's all about dogs. And I want to have both of them in my subnet, but they are going to be different mechanisms, and I want to allow for that. And I'd say, well, let's say I got cats and I got dogs, but now I want to incentivize the creation of pictures of frogs. And should I be allowed to do that? And should miners be allowed to mine all of those, or just one? And kind of how does that work? So, um, Keith, I'd love to hear your thoughts on like the value of subnet mechanisms. Is it something that's a game changer for people? This has been around for a little while now, but we're starting to see some traction towards expanding it into like a subnet mechanisms V2, I guess. with more mechanisms allowed per subnet. What do you think about that, Keith?
I think there was some real sort of pioneering work that was done, um, not last year even, but the year before on Subnet 19. Because I remember in the conversation that I had with them on on my podcast that they had essentially like 10 of these competitions going on in order to power Corcel, which was like the first
Mhm.
consumer facing, you could call it like website or application that allowed you to like do a bunch of different things with Subnet 19. So they kind of like pioneered that, and I think that then this whole conversation about like subnets within subnets blew up when believe it was Score Subnet 44 like 6 months ago or so was on a novelty search, and it came up, and everyone sort of lost their mind for a few weeks about subnets within subnets. As long as it doesn't make the investment of that subnet, any more complicated than just swapping into the alpha, I don't think we need any more sort of like derivatives underneath an individual subnet. I think that's going to make it a little bit, it's going to just like, the steepness is already there, like to get to the top of Bittensor Mountain and understand what's going on, it's quite a climb at this point. And although we're making some huge roads into making that, quite a bit easier, I would say, it's still pretty dang difficult. And if we start like having alphas or second alphas or sub alphas, or I don't know how it would work, as long as it ties back to the one thing, I don't really care, honestly. Just like I probably don't care how many miners are in the individual subnet, really. If I trust that subnet owner enough to put my money in there, I'm probably also trusting them to distribute the alpha responsibly if they've chosen a different mechanism than just the traditional every miner registers a UID. I just took a quick glance at the number of miners in each of the subnets. There's less than 30 subnets with more than 40 miners. So only, call it a quarter of our pool is, and way less than that if you go above like 200 that have like a full mining pool of. So the need for this is sort of, I would call it like boutique or niche at this point based on
Mm,
the subnet itself. Now, I would also go back to what I said before. I don't care if there's only one miner and the subnet owner owns it. If I trust that subnet owner and they have mechanisms in order to make the visibility so good that it's like you could still trust what they're doing, that's fine. If they tell me they need 1,000 UIDs, I guess that's okay too, as long as the chain can handle it. Like if every subnet goes from 200 to 1,000, or what if one goes to 10,000, and then we start seeing all kinds of I guess like one subnet with the same number of like chain utilization as maybe the next 50 subnets. That subnet, I think, has to start paying for that. So like I don't know what that looks like. I'm sure you do more than me as far as like infrastructure behind the, like we talked a little bit a couple episodes ago about these chain nodes. But at some point I think subnets have to start paying for their interaction with the chain as well. And if you
mm,
decide to go this direction with increasing your UIDs, and you're putting that onus on right now OpenTensor, but eventually somebody who's going to be running those nodes, you need to like pay for each one in some way. I don't know how that would work, like transactionally or bandwidth wise, or
yeah,
if
yeah.
there's even a way to measure it. But you can very easily compare across subnets and now I don't know about like how often miners are communicating, and there's 1,000 different variables that would have to go into some kind of calculation like this. Not 1,000, but dozens or something. Um, so that's kind of where I land with it. And the same thing with the mechanisms. Like if you've got a couple of fun games that you want to split out into, easily differentiated sort of competitions, because you don't want to bother with the coding it all into one incentive mechanism, and it's easier to do it that way, that's great. If it's also easy on the validation side, if it makes it so hard on the validation side that you got to run 3 different pieces of hardware or keep 3 different, code bases updated or whatever, I don't know how exactly that works. Maybe you could, I guess, talk to those 2 things. Like the one would be the utilization of the chain itself, and the second would be for the players that are doing the other half of the work of the subnet owner, the validators, and coming in and making sure that the miners are scoring the miners. Can that be
Yeah.
done effectively with multiple mechanisms as well, or as easily?
Yeah, these are good questions. I mean, chain bloat is obviously a big concern for really, I mean, OpenTensor especially, but for the broader ecosystem is we don't want a chain that will get kind of slow and unwieldy, especially for people that operate archive nodes. If you've ever started an archive node, you know how big the chain has gotten, how long it takes to catch up. Um, but
It takes
I
days,
don't
doesn't
think,
it, to spin one up at this point?
oh yeah, days if not weeks.
Okay.
Um, Yeah, I mean the chain itself is like over 2.5 terabytes, I believe,
Mm.
which is larger than the size of the Bitcoin chain. Um, but anyways, that's neither here nor there for now. But uh, I don't think subnet mechanisms really meaningfully impact bloating currently. But if we were to expand the number of UID slots for a subnet, you could see a lot more resource utilization on a particular subnet that had multiple mechanisms. Let's say you had 5 mechanisms and each one had 256 miner slots. Then you would start to see this idea of like, hey, if you're a subnet, you're taking more resources off the community ecosystem chain uh, compared to some other subnet. You should be either contributing towards that, or you should be running something that's off chain, or maybe like kind of almost like a parachain.
Mm.
Like for those of you who know what Polkadot is another chain that is the company that created Substrate, which is the basis for the Bittensor chain. Bittensor is its own chain. It's been developed completely on its own, but it uses a framework called Substrate to build it. And Polkadot is the first chain that used Substrate. And they introduced this concept called parachains, which is you have these separate blockchains for these other projects that all are tied into a central chain. So you have the central chain that kind of organizes and orchestrates everything. But then you have these parachains that run off of that. And there was a time where there's a question of whether or not Bittensor should be a parachain. And we are not a parachain, we are our own chain. But there is a question of should subnets kind of be like a parachain, where they have their own kind of mini chain that they operate, their own little mini Yuma consensus, and they really kind of just submit the results of that to the Bittensor chain. So where you have like, hey, if you're a subnet that you want to consume just tons of resources on all kinds of chain operations and whatnot, then knock yourself out. But leave the Bittensor part out of it. You know, that's something that I think is a big conversation piece as well, and we should definitely double click into that another time. Um, but yeah, there's a lot to consider here. I think subnet mechanisms has some room to grow. I do think it's kind of niche. I do think it's kind of boutique, as you mentioned, especially when, as a subnet owner, you could just build a code base that uses effectively two different validation mechanisms in the same mechanism. I think the reason to have subnet mechanisms is that that's on chain is that you're providing um, just some better bookkeeping and things like that, and you're providing um, some I guess better building blocks for subnet owners to do that, so they don't have to do as much work from scratch. Which is obviously important, is that we want to make sure that building subnets is as smooth and easy as possible.
Mm.
But it is kind of boutique, and I think that that's something that is always going to be a little bit of a uh, consideration point. Is that worth the effort to develop? And right now we have primarily the OpenTensor Foundation that's developing the chain, but we are starting to get some other parties as well that are interested in contributing to that. We've had a couple of contributions from other parties, like we've got Tau Stats has contributed a thing or two. There's a couple other parties around there, and so as we're starting to see more people getting involved in chain development, we might see these kinds of boutique options being developed more freely as well, just because there's resources that are available to do so. So that's something to consider too.
One thing I would like to see is that the barrier to entry to become an operator of a subnet owner, okay, but also I'm talking about the operator, you're writing the code. You're actually like running the thing, tuning the incentive mechanism. Like
Hmm.
and that becomes the barrier is dropping. It's going lower and lower as the ability to use AI for coding gets better and better. I'm seeing like it's getting closer to the average person to maybe be able to do something with just like natural language that ends up turning into a subnet. The thing that I'd be afraid of is if we had take this extra level of complexity and create some kind of additional responsibilities of managing your own like chain or have the option to manage your own chain. I mean, there's only one subnet that is doing that right now, as far as I know, and that's Hippias. And they've been working on it for months, and it doesn't appear to be very easy. Now, I don't know how like that would mirror what we're talking about here, but like it doesn't feel like it's within the subnet owner like wheelhouse of core competencies for me.
Hmm.
So then I would just try to push us towards simplicity until we really see a situation maybe where we have a subnet that's established that wants to go in a direction and can explain to everybody who are decision makers in this arena why. If it's a brand new subnet that like hasn't earned its stripes, or a team that can't articulate perfectly like why it must be this way and we need more UIDs or we need more mechanisms or we need this we need to be able to run our own chain or whatever, then I'm just kind of like, build a real subnet first and then come in and start architecting the chain, you know.
Hmm.
But if one of these more experienced teams tells me they need it, then I believe them, you know.
Yeah, yeah, no, I agree with that, and I think that um, you bring up a really good point of like the easiness of building a subnet should be prioritized for us. Is that if subnets are expected to do everything they're currently doing plus maintain their own side chain, that can get really complicated really fast. And so whatever the end result is of subnet creation and operation, that should be straightforward, and it should allow subnet owners to focus on actually producing the results of the subnet more than just the nitty gritty stuff. But um, I think there's
I
a lot we can go into there.
Yeah, and I just want to highlight this too. I think there's sort of two camps as to where we see maybe the true unlock for Bittensor coming, and one I would say people think that AIs themselves, especially with the whole Molt bot thing going on, are going to be coming in and running their own subnets, and that's the real unlock. And once the AIs themselves start mining and swapping and building and owning, then Bittensor is going to fly. Then the other direction would be like, oh, well, when anybody can start a subnet, anybody can register a subnet now, but anybody can code a subnet, and using just natural language, like you would chat with an LLM, you can just chat with a subnet building artificial
Hmm.
intelligence that can make all of your ideas that we all have a reality in the form of code. And
Yeah.
then that's the other unlock. And I think both of those things are going to, in the next, they're already starting to sort of rear their head now and come up above the horizon a little bit. But I think that continues to happen, and in the next year, maybe two, we start seeing that become a reality where you'll see AIs doing this stuff, and you'll see humans being able to do it that don't have any coding prerequisites.
Yeah, and it's funny you mentioned that because Jake, the co-founder of Bittensor, he actually created a subnet template based on LLM prompts.
Oh.
And so the idea is that you use your LLM and plug his template in to help you build your subnet. So you say, "Hey, I want to build a subnet that does X, Y, and Z," and it just produces that for you. So that's like a totally different from the like official subnet template where it's supposed to help software engineers and whatnot build something. This is to help LLMs build that for you. And so I think that type of a future is very much here, if you want it to be. So exciting stuff. There's a lot more we could dive into, guys, but I think this is a good stopping point for today. But this has been a really good chat, Keith. I think we've covered a lot of ground here, and I think that this is something for us to double click on more in the future in terms of what really makes a smooth operating subnet. How does subnet scale Yeah, how does that affect the chain? How does that affect the ecosystem? You know, what does registration, deregistration look like? What does liquidity look like? There's a lot of subnet dynamics here that we're covering today. So
Yeah. Great talking with you, man. And for everybody listening, I guess we'll catch you next week.
yeah, we'll catch you next week, guys. Yeah, please comment uh, on anything that you guys want to see in future episodes you want to cover. If you have guys got questions on how Bittensor works or anything like that, we'd love to share that with you. But otherwise, please like and subscribe. And other than that, we'll see you at the very next episode of The Carrot and the Stick. Take care, everyone.
Bye, everybody.